Good morning. Just thought I'd do a very quick update and commentary on the yesterday's announcement from the Reserve Bank of Australia. In one of my earlier videos, I did mention that we were expecting interest rates to drop another once or twice between now and Christmas. That obviously happened yesterday. It wasn't rocket science. It was tipped by about 80% of the prominent economists in the lead up to that announcement. What's far more relevant though is what does it mean for us and what's the impact on the economy? Why are they doing this? So firstly, the main motivation of the RBA is to really strengthen the economy. Inflation is low, wage growth is low, and specifically in the commentary from the minutes of yesterday's meeting, they talked about doing whatever was required, was pretty much the message, to bring Australia to a full employment. Now, that generally means somewhere between 4.5% to 5% as an unemployment rate. So we are slightly above that as a nation. If we look specifically at Sydney though, the Sydney unemployment rate is ticking around 4%. But even with that low unemployment rate, we haven't yet seen that translate into significant wage growth. So that's why the commentary from the RBA is that they've cut and they will continue to cut to strengthen the economy and get that cash flow happening. Personal opinion, what we really need at this point is we need the government to step up, okay? Because consumer spending is low, as I said, inflation is low, and so forth. The government seems, because of their election promise, hell-bent on getting to a surplus. What that actually does is it takes money out of the economy, and effectively, if the government is saving and stashing the money away, then that's what businesses are doing. That's what we're doing as consumers. We're not spending, and that's not promoting the economic growth and the inflation that we need to get it back into the target range. So hopefully that puts some context on what's happening and why they're doing it. In terms of the big banks, the government's always deferred to putting the pressure on the banks to pass it on in full. That's less of what we need. As interest rates drop and the cash rate continues to trend towards zero, it becomes harder and harder for banks to remain profitable and pass that interest rate cut on in full. So at the point of recording, the CBA had come out and said that they would drop owner-occupied interest rates by 13 basis points. What was interesting was that their investor interest-only loans would actually have the rate cut passed on in full by 25 basis points. So what we've seen over the last couple of years is that gap between the owner-occupied rates and the investment rates was widening. At least CBA's decision late yesterday was that gap is going to retract a little bit and bring those rates back towards parity. We'll see you next time.